Cal, thank you. After all that yakking I was doing, hey? Thank you so much, Cal. Hakeem, can you hear me now? You guys can hear me now? I hope so. Thank you, sir. Thank you. Thank you. Or ma'am. I don't sure who that is, but I made the mistake of saying man to curry fish ball, and it was a her. So I apologize. Um, so quick review. I like to see these upside objectives, and keep in mind, no one's trading today of any. If you're smart, you're staying out of the market. If you win something in here, you're good. You're a lucky gambler. Luck was on your side because there's no logical reason that you'd expect to understand where NFP is going to go today. So, um, very much keep it under your hat, keep your powder dry, wait until after the election, and just watch the fireworks. Just kick back and enjoy the sentiment hunt, as it were. So, I'm looking for these upside downside objectives, keeping in mind that we do have old high. We could run out this old high and just rip right through that for election day. So I'll even put that up here as well. These are all the potential things that I can see in the next little while. Buy side liquidities up here. And the downside objective is here. I'll give you these a layered perspective. I got 3 of them here. Let's see if we start aiming for these objectives. My computer's so slow. This little laptop, I need some more juice on my laptop, more power. I need more power, Scotty. I need the power. All right. Those are my downside objectives and my upside objectives. Um, yeah, those look good. Now, ladies and gentlemen, presenting the master of price action, the Canadian fabulous, the Marvin Gaye of chart music. Derek, you're always good for a laugh in the morning. You always get me smiling. Your wife must just roll over and go, "You're so cute." Good morning, Edgar, and morning, Ollie. I got 9 minutes to whip through this stuff so I can see U.S. dollar futures. It's sitting. Who knows where that's going to go? It's going to be fun to watch all this stuff just blow up. Trailing stop. You'd figure you'd want to see that at least run up and take these. That took out the relative equal highs here already, and this is high resistance. But what's high resistance in NFP before an election? So we could run all the way down into the relative equal lows below us. Clear that all out. Could run back up and make a new high. So let's look for oil. This isn't oil. This is oil. Oil's making a dash for some cash. Yeah, I see oil going higher from here. If we can get through this level here on the hourly, get above here, use this as support. I like to see that go higher. But once again, due to heavy manipulation in the market, the forecast is not essential, not proper to put your cash in the market. So what do we got here? Wheat, soybeans. It'll be interesting to see where we start reaching for with the sell side liquidity down here. Another big run up into this box, whipsaw back and forth, clean out both sides of the market there. This will be fun. Let's get a overall view of the fireworks on the daily chart throughout all the charts. How you guys doing this morning? It's early morning voice. It is only one coffee, so far voice is very white voice. Yeah, this morning I got no. I have no coffee this morning. I'm going long for NFP, 15 contracts. Oh yeah, good for you, man. Only joking. Well, if your account can weather one of those 15 contract drops and then like to 100, 200 points and then shoot back up again, you may survive it, or vice versa. Belong to an insane asylum. That's exactly it. He missed half a sentence. I belong to an insane asylum. Good morning, Hadi. You're not touching the market this morning, are you? And if you guys touch it, I don't want to hear about how successful you were. If you make money this morning, I do not want to hear about it because that's not impressive at all. That's just insanity. Clearly, Lady Luck is on your side. 4 minutes to countdown. Check your protein pills and put your pajamas on. Can you hear me, Major Tom? It's not pajamas. I don't know what it is. Can you put your record on? Can you put your something on? Someone's in a tin can. I note that price gave up just before yesterday afternoon's high, so we now have two prices right there waiting to be taken. In NASDAQ, you mean? Yeah, we just cleaned out the lows here yesterday, and it's just sitting here. So we're either going to snap all the way back through this, or we're just gonna, this is where you look at that NFP and you say, when Michael was saying about where's the first initial drive? Is the first initial drive to go down, then shoot back up, take people offside, then turn around and drive back down? So it's that first opening dip that you look for and see, out of curiosity, we're just going to check that theory today, or at least that's the theory I'm going to check, because I want to know if that's how often that happens, that first initial dip or jump, and then see if the retracement for the rest of the day or shortly after running the opposite direction at 10 o'clock, it starts to move in that direction of the first um, jump or drive or dip or dive. No, dip and dive are the same thing, aren't they? Just waiting. Good morning, Tristan. Question is for me. Will it go up and then back down, down, then back up? Or what if we see TGIF? Which one would take it up to 164,242? You want to see it get up into here? So there's 274. If we come back into this wick, think about this wick here, and splitting that wick in half or into quarters, you get, we're already at the bottom of it. So the middle of it would be 187, somewhere around there. And then you've got 274-ish, whatever that closes on that end is 274, yeah. So 274, then you've got consequent encroachment of this halfway back up this candle, which would probably be around 274 still. You have an imbalance up here still at 482. And then you got main threshold 605. So those are the numbers I haven't written down. Oh, he's got a little pad right here. My brother's got a little pad. I'm going to steal his pad here. Oh, he's got a marker. I got to make sure this was it's quite glossy paper. So let's start from the top here. 26624. 518. 482. 432. These are just all the levels I'm interested in. 274. 195. And then downside. 964. 820. 900 big figures already been hit, so that's been hit already, so 461. Then we get down to the bigger boxes. Do we have some relatively equal lows and a weak fair value gap above us? Yeah, there's a little imbalance in here. See that the little imbalance has been left untouched. Really, with any bold candles, they've all been just wicks inside there. So I'm thinking maybe we're looking for a revisit in a crazy day. And if it's really wild and chaotic during the election or today, we could see just a hunt on all these people that are in troughs and retail. Look at that. Retail's like fully all jacked on that. We've got this little trough they're creating in here. They're drawing their little lines. And we can see this just hammer through here and take them all out. So I want to see if on a non-farm payroll day, if we get a run, if we're going to go crazy in sentiment. This is 5. This is 900 handles here in Dow. How crazy would that be? Some crazy whipsaw. Unlikely, you say? We have equal lows below us in Dow. And so for Dow, I'd be looking for something like this. I'd want to see. Ooh, my tummy growling away. I haven't had coffee. I haven't had nothing this morning. All right, let's see what we get here. We're inside that breaker right now, so damn you. Well, they're frustrating this. Took out this low here. Breaker, come back inside it. We're inside it now. So do we revisit consolidation for a CAM Model 1, which we're hitting right now. So CAM Model 1 for continuation on the downside for Dow. All the way up to a CAM Model 2, which is inside this order block here. You don't want to see that order block give way to the upside. And then if it does, then we're revisiting back inside that range again. And that line above us is the potential. But I like this order block here. I like this consolidation for a CAM model entry for a short. Not that I would take it, but I like that idea right now for a short. So I'd like to see a little pop up, maybe into the bodies here at 42, 272 or 250, somewhere around there, and then roll through and take out that breaker. And you notice how we haven't got that taken out in NASDAQ, and we don't have it taken out here yet in like we don't have this breaker here taken out. In S&P, equal lows below us. For today, you could see on a normal day, you could see a run into here perhaps. That's what I'd be looking for just for today, but because it's a crazy whipsaw of a day, it could be hunting for liquidity all above here again. That bull flag was hopeful for retail, and now we're looking like we're going to take a hunt on here. Just everything feels so heavy right now. It doesn't feel like you're going to get this sentiment. Everybody's thinking that we're going to go higher. And I think this is just an opportunity to slam it back against everybody. But that's just me. What do I know? What do I know? So we got to get through this level for that to go higher. If we drop back down again and take out this level here, this little cluster, and we've already got a reversal going on here inside this on the 15-second chart. See this reversal here? You've got the breaker that takes out a high. We've traded all the way through it. Break market structure to the downside. We've come all the way back up inside it and inside this imbalance, the BISI, and now we're trading below it. So we're giving ourselves an indication we're coming lower anyway. So for us, we want to see if this it can come all the way back down into here, which is the bottom of that on the 15-second chart. It's literally coming back into this little spot right here. Clean that up, and then you want to see it leave from here. You don't want to see it take this candle out on the downside. So we'll kind of watch where that goes. I'll put that in there, otherwise I'll forget that that's a little area of interest for me. Well, this is all natural gas stuff here. Pre-market, I have a buy order right here at 12.56. Pre-market's already down there already. Going down first. I'll take a trade today on top step valuation account. No money at risk today. A Friday loss. Take and make for a miserable weekend. Better to enter the weekend knowing the money has been made Monday to Thursday. Agreed. Good morning, Hans. Good morning. Good morning. I'm expecting a move up to 180 following by a drop at the open. Gallo style. Morning, Zach. 9 foot. Yeah, it's been pretty lackluster already. Breaker in Dow and Nasdaq. It isn't yet fully sanctioned breaker yet, is it? In Dow and, sorry, which one are you looking at there? This one is a breaker. Dow and breaker. In Dow and NQ, it isn't yet a fully sanctioned breaker, is it? When you take this down close candle, there's a swing here that takes out an old high. This is a breaker here. And I look for all the candles that take out swings. And the most highest sensitive one, I know Michael looks at all three of them. I do as well, but I also look at, like he mentions, that the last candle is the most sensitive. So you see how this candle here has taken out, sent price down and taken out the swing here on the low. That makes that candle there the breaker. In my eyes, that's how I've defined a breaker, and I've gone back over his materials, and that's how I've defined it. So if I'm wrong, same as this, we have last down close candle in a swing. The body is the deepest, and it takes out an old high here. That makes that a breaker. We have these two candles here that run down. I guess they would be the parent breaker of that run below these lows. And you have a swing point here, which is the breaker itself, I suppose. But I look at it taking out the recent swing points by definition. And it's okay to disagree with me. I know this has been like a bone of contention with several other traders and my idea of what I think a breaker is and which one's a breaker and which one's not. Because I think you can trade a breaker on both sides of it. You can catch this one on the upside coming back down to it. So if we take out, if this candle here takes out that side, it comes back, trades to the breaker and then goes higher. Or you can have it, because it's taking out that high, comes back down below it, comes back into it, and then trade further down. So you can trade it from above and you can trade it from below. It seems to be, whatever it is, then it seems to be an area of sensitivity that my eye goes to that seems to work. So, morning, Mark. Did you guys catch the buy? No, we're not. I'm not participating at all today, Mark. Not unless it just smooths out in the afternoon or something. But I'm only here till 9 o'clock Canada time, which is 10 o'clock New York time. You guys can participate at whatever level you like. I'm staying out of it. Going long at 8:30. Consequent encroachment of the wick, says Isaac. I'm gonna take cola. How do you start? How do I start what? That's kind of a general question. How do I start? Greg, good morning. This morning, good morning. Be interesting to see if we get an end of day below 2019 or 219. Will be bearish close below last 2 weeks. Good morning, Dave Barry. Good morning, buddy. I wasn't watching it initially. Did it dip down first and then go up? Or was it an up, down, and then run back up again? Did anybody see the actual opening of that? What was your setup, Mike or Mark? You went long at, I went long to 61.9. I don't get you went long to 61.8 of the 15-minute. Oh, like 62% of the Feb, you mean? Yeah. What was your setup? So looking at this candle here, I'd want to see it break the structure here first before you look at anything of interest. It went down first and then swept up. Okay, thanks. Oh, you went long at 62% of the range and then took out 127. Is that a a trade model for you? Or were you looking at consolidation? I don't know if you're a CAM model trader or not, but there's a CAM model 1 to take out the highs. CAM model 2 does not take out the highs, fills the fair value gap here, rolls over, and now we finally close below the mean threshold of that. We have a CAM 3 set up right here to go higher. So CAM 3 would put you right in. So if you're a CAM model studier and you like your CAM model setups, 50% or more is a no-go. Up to 50% for a long, if you're below the 50% of the consolidation, the leg that takes out the consolidation then goes higher, comes back into it. Below that, you can trade anything below 50% of the consolidation when you have a leg like this. That's a CAM 3, all the way down to 50%, which is that order block. Its mean threshold. Then you want to see a reaction. You see this low's taken out. We have a fair value gap here. We've traded above it. back inside it. So now you're expecting to see this area here get taken out to the upside and then go higher and take these highs. That's a cam 3. So you got 1, 2, and 3 all set up inside that little leg we had formed this morning. It's interesting. You get literally a cam 1, take money. Cam 2, take money. Cam 3, and if you can get back up into right there, you can take money again. All three models, you get to make money on this morning. Not that you would make money on that, not that you would take that trade. What we're watching 3 times. If this pans out now and takes out these highs, that'd be a nice cam 3. And this is kind of a good day to document the psychology of how you're trading. Do you feel the urge to get in here? Do you feel no stress whatsoever? Do you feel like, I'm just going to wait this? Because you know there's more opportunities around the corner. Like I've just pointed out 3 different entry models just off of that little consolidation and leg there. So I'm not, and the slightest urge to get in this, I'm not going to give back any profits I've made this week. Going to keep those in the bank and just watch this. Just with this kind of volatility that's in the market right now and this election that's coming up. I don't care if it doesn't, there's no volatility. And this just continues to march off, doing its little algorithmic thing. Throw everybody off. They're all expecting this giant crazy expectation that the markets are going to jump all over the place, and it just does nothing except just a slow algorithmic grind. I'd be all right with that too. I'm not going to look back with regrets. I'm just going to say, interesting. Just another thing to put in your diary or in your journal for a reference in the future. When you're looking back at elections, you can say, well, I remember that one time when not much happened at all. And that was during the Trump-Harris time when the whole world was on edge waiting to see how that would turn out. So there's the beginning of your Cam 3 payout right now. So you'd be starting to pay yourself here, moving to break even. TGIF model. Yeah, you start looking for TGIF in the afternoon. You can get that run up until 2 o'clock. And then after that, start looking for it to settle back into the weekly range. Mark says, I measured the range from 2054 to 21.7 and was sitting at 62% of the range. And you got in at a premium? So you bought a premium and wanted to go for the high. Okay. Okie dokie. Interesting. And I'm glad it worked out for you. So far we have a little swing here. Back up into discount to premium. We've hit the premium range. Do we come back through here? $122. I'd like to see 122 hold price if it comes that low. Make this a little bit bigger. So 8 o'clock, you want to look for a run on liquidity. Till 7 looks for smooth edges, make them jagged. So now we've made this jagged here. Now you want to see the next little run to liquidity. And we have, this is all trend line stuff here. So I'd love to see that bust the trend line and get all the way back down to the midpoint of that. So now we've got the senior array, sorry, the premium array up here. We're through the discount already. If that, see how it goes below it, tap it, come lower. So your cam 3 was literally to the premium array, roll over, and watch to see if it comes down to 50% now. See how it acts there. But just inside that range, you have this discount run all the way back down from high to low. That pulled back. Let me just see. So we're looking at the mean threshold of that candle is the lowest downside. Someone's in my front door. Stand by. Okay. So we've traded below here, traded back up into it, looking for a lower run, looking for that. Oh yeah, we're doing this, aren't we? So there was 62% retracement back into this level, hit 50%, reacted off, hit 62%, reacted back into that premium array. And now we're going to dig down, see if we can get into this 50% below us here and see what kind of reaction we get out of that for the next price leg from here. This computer is really taking some time trying to catch up here. So let's see what kind of reaction we get here. Agreed, always trade for tomorrow. If it's not obvious algorithmic signatures that are part of your trading plan and low resistance, just don't do it. Better to watch, observe, and view as a study than lose your arse. Yeah, there's the 50% right on the money. So we'll see if we get a push off from here. So that would be your perfect cam 3. And then if it trades below that and your stop loss is down here and trades back into it, get out. You want to see it hit this and snap away. So the fact that it's even coming down here again, I don't like to see that because we're into this there's a mean threshold, this lowest down close candle, which would be the breaker. All these would be a breaker that takes out this all this high here. So you want to see this mean threshold hold price and really start to push away, like snap off here and start going higher. Nope. Again, watch where the body ends, but I don't like the looks of that already. And this doesn't mean that Cam 3 doesn't work. You're on a crazy time on Fridays. Yeah, we can use that as an excuse, I suppose. But the fact that we did not see that little hint that we're not done, usually you want to see it hit it. It usually hits it and just snaps off of it right away. Or you get a nice little close on it, and then the next candle just starts marching away from it. So let's pretend that that Cam 3 right there was, you were on the wrong side of that. Stop loss is sitting down here. The moment it comes back below this low right here, I close that trade out. You're waiting for it to come back to your 50% there and close the trade out. Right there, I'd be out. It's coming down here. So you're looking for 50% of this wick. There's 50%. Now look for the low. That's just my fail-safe rule there for does it come back and give you an opportunity? And usually you look at it as if it's that close, I just go, okay, I'll give you that wick. If it starts to trade to the bottom of that wick again, I'm out. Usually it starts to trade back up. If it gets there, then you get your trade off at break even instead of taking the full loss. But as soon as it traded below that again, I'd be out. So it may come back up into here now, but that's okay. 50% of the wick is being respected by the bodies. Look right here. The body's respecting that. Wicks can do the little bit of damage. Bodies do the talking. So there's your break even. Now what you want to see is, now that you've taken these lows here, it's not a significant low. Didn't take out the range low. You want to see this candle get taken to the upside. Then you're back inside this range, and I'm looking for liquidity up here at 125-ish. Got to get above this candle here. If we cannot close above here, we're still coming lower. Look for this low down here next. There's your fair value gap. Closed above it. We can get a retap on that inside this candle, then you have to ask yourself, in that small little run up there, where am I in terms of premium discount? Don't take the large range. You're going to take from there to there right now. So you want to see, for confirmation that this is going to get back into that range, you want this to come back, be taken out with a bull candle, a body, and then use this for support to run back into the range. That'll still give you less than 50% of the range for a discount to a premium. Not that you're looking to trade it. You just want to look at how that price, what I'm expecting to happen right now. And so right now we've traded back into the fair value gap. So there's your slight reversal, not a significant one, but one nonetheless. Now you want to see it run up and through here for confirmation. So for me, that's not a buy to make any money off of till we get above here. And if you're saying for sure, I'm going to take that, then I want to make sure that my stop loss sits just below the mean threshold of this candle here. Because if it trades below this on a close, then we're looking like for another run down here. So I like to see this now big bull candle like we asked. Got to close above that candle's high. See how it literally closed on it. Closed on it, come back down, find support here now. Now I want to see, I wouldn't want to see this. I would like to see that stay open now and go higher. Like if it's got a bullish intent right now, this is a great time to see that leave. And again, I'd like to see a bull candle get above that, not just stop on it. My rule is a body must break that high, and it hasn't just yet. So we could get a revisit into here. There's a small little gap in price here. It's right down to 0.96. You don't want to see 0.96 get taken. If it does, then this whole idea of it going lower to take out these lows, this just takes people that don't have that rule of body breaking the high offside. See how that we've closed below here now? Now I'm looking for this to go lower. Come back inside this range all the way up to here. That candle's low. And go lower. And if it starts to run above it again, this level, because now you got to draw your fib tool in here, or your boxes in here. If you want to stay, this is going to be the fun part about staying in price. Get out of there. This computer's lagging. I'm used to so much more power on my other computer at home. Come on. I will not be frustrated. So this is kind of like the level I'm looking at right now. We've traded below it. Now we're trading above it. So you want to see the fact that you're bouncing around on either side of that right now. You wait till you get to one side or the other gets taken now. It has to break above this candle's high now with a close. And then come back in down and find support at it. Like that. Wicks coming to this mean threshold here of this candle. bodies are still respecting that fair value gap, slightly above it right now. So if it goes above again, you're back to going long, and you want to make sure it clears that high out first before you get back into that range. So it's got to get through the mean threshold on the close, and that candle's high now. Hadi, smash the like button, guys. Thanks, Hadi. So this is one of those, even if this wasn't a non-farm payroll day and you're looking for an opportunity to get in, and we've closed above, we've closed below. Now we've closed above. So if you get that kind of like a consolidation right there where you can get beat up over one fair value gap, you don't have this premium and discount range. You're stuck in a small one that overlaps a single fair value gap. You wait for the structure to break to the upside, because this is now becoming a consolidation, and that consolidation is your CAM model. You want to see the big displacement candle, and if you're inside the range and your displacement candle comes up into a premium, you wait. You wait for that to get taken to show you some real significant movement, or it starts to run all the way back down into your small consolidation here and see if we can get lift from there. Or does that now become the CAM3 leg? There's so many different things you have to keep in mind. It's not just a simple, oh, there's a fair value gap, trade it. It's now an inversion, trade it to go high or trade it to go low. You have to keep in mind a few things. So again, we're below it, we're above it, we're below it again. We did come to the mean threshold of that candle. It held price. It's what you want it to do if you want to keep coming lower. That's like the line in the sand there. And then you've got the line in the sand. See how these two candles are battling each other right now? If this were a video game, the swords are smack, smack. They're off the mean threshold, mean threshold. They're kind of just bouncing off of one another inside a small little range here. So now you've hit your lowest PD array and your highest PD array before taking out the next one, which is the rejection blocks, and then the highs and the lows. So you're always looking for each one of these. So you're looking for right here. See that? You look for the high and the open. Look at that. The open is hit. Then you come back up to the open of this one. Then you come back down to the high. Then it's the mean threshold. Then it's the mean threshold. So you can see how it's going from array to array, array to array, and then back. Now all of a sudden it says I'm running out of arrays to hit. I've got a small little fair value gap here now inside this run, and right inside here's the small imbalance. They're practically overlapping one another. So this is getting smaller, smaller, compressing till it has to bounce out of here. That's how I kind of look at each one of this, even inside that small range. That's what I'm looking for. So I'd like to see this provide support off of here now, keep pushing lower and start really digging. We're drilling into the floor, and which one's weakening. We're drilling into the ceiling, which one's weakening. So who's going to bust out first? Our expectation is we want to see from this CAM3 model fail. We'd like to see that go lower. That's where my 51% lean is towards the downside. So yeah, and we've got a reversal here back above. So you want to see that whole price, and it starts to give up the ghost when you start to trade through it on the downside. Then you say, well, that's not supporting another run back into here. So I want to see it continue to just degrade and just roll over here. And welcome to Crazy Fridays. See how we're using that level right now as support? We've traded below it. We've come back, found support at it. Mean threshold is still holding price. See how it's just drilling down onto it? So you're setting your drill bit now. You're going to weaken this. This candle gets weaker every single time you start drilling into that mean threshold again. It gets weaker and weaker until it finally breaks and price drops forward. If you're looking at it from a metaphor of drilling into concrete, because Your breakers are usually your strongest candle, right? So welcome to the consolidation. Now, the fun thing is if you're not staring at this and going, where is it going next? What little tiny spot is it reaching for? You really want to study your price because the better you get in these small little consolidations, the better you'll get in overall longer ranges because you'll know exactly what fair value gaps, imbalances, breakers, what becomes sensitive, what doesn't, what part of the range am I in, what candles am I bouncing off of. Like look at each one of those things and say, where am I? What is it that I'm bouncing off? They're not just random wicks that go somewhere. They're reaching for specific arrays inside a small little range here. And if you're too bored to study that, you're like, yeah, this is boring. I'll wait for something else. Like you're adrenaline junkie, you want the rush. Nothing wrong with that. You'll get there. This is the level of detail. This is almost like liking it to in school back in the day. Derek and Abs and the boys will remember these days when we had to actually do handwriting in class. Penmanship was actually a thing in school. Do you remember that, Derek? When you had to your handwriting, you had to submit your handwriting in class, and you get grades on your handwriting. I write with my calligraphy pen. Now I love fountain pens, and I absolutely love calligraphy pens. So I write all my notes in calligraphy. Except this morning, I've got my brother's uh, Sharpie marker. I'm using his Sharpie marker, but anyway, this is kind of where I digress. My metaphor is kind of getting long, but this is kind of like you can read price and then you get really good at reading price when you can spend time developing these small little uh, areas of price analysis that you really want to try and zero in on, just to find why is it moving here? Why did it just come to that one spot, stop, and then reverse, and then come back to this stop, and then come back into the consolidation again, or into this fair value gap, or into the consequent encroachment. The bodies respect to that, and they hit the hold right at the top of the closes here and the opens, all lined up again back to this order block. And we finally drilled through the mean threshold of that candle. It gave way, and now we're running through rejection block, old low. So you can see how the drilling begins. There's the metaphor, and then your handwriting gets so much more fluid and cleaner when you study price action. You understand a better idea about where it's going. Oil should close above new weekly opening gap. So we did go through our box down here. Look how it played off the box. Came right into it, reacted off of it, went through it, came back perfectly inside it multiple times, went down low again before finally breaking above it. Fair value gap, trading back inside it to perfection. That candle's high, that candle's low. Start moving away. Lots of little imbalances here for reversals. Takes out the structure here on the downside, comes back inside it, runs down deeper into this range. You have to take either this one, this one, this one, this one. You decide which one you like. I like the large, this fairly good displacement candle here. So pull your fib from here to here. See how much you retrace back. Do your fib tool exit. Always look every time you take out a low for this big fair value gap potential reversal. And it's right there. There's the potential reversal. Comes all the way back into a CAM Model 1 entry for continuation back up into a larger part of the range. Back to this old thing that you were looking for here for the first time to get in on for a short. Came back, revisited that again. We have highs taken, high taken, reversal, imbalance, drop below it, come back up inside the imbalance. Now we're inside this range, or this range if you're looking for a quick liquidity hunt. So you're also back inside the big swing here. So this fair value gap from here to here, you draw that all the way out. If you drop below the mean threshold or the equilibrium of that consolidation, 50%, there is no extra leg there, so it's CAM 1 or 2. If you drop below 50% of that, which would be the fill of that fair value gap again, it's been worked. So I'm saying if you come back inside that level and you lose that 71.08, you're looking for a further run down into this range here. What's Bitcoin up to? Yeah, 013. If we can get back to 013, 055, what's the low on that candle? 67. If it doesn't come down into that 55, you want to see it get above 556 and then use 556 to 431, 43 or 389 and go higher into that range. You need to get above these candles here and that swing with a close, come back, find support at it. If it keeps pushing higher, look for this candle, and then you're probably above 50% of that range anyway, so you'll be paying premium for it. Gold. Gold is running back into this, rebalancing this candle here. We have not broken down structure, so we're still bullish on this overall, even though we did have a slight little reversal going on here, and we're pulling back into the range. So I'd like to see it come back all the way up to 782. Consequent encroachment, right where it's just hit now, would be nice to see it stop there and come back down, take out that low, and then come back into that range. And then I'd be looking for 20 or 2640 as the downside objective on that. So we have a slightly bearish hint that we may be going lower. Again, we'd have to structure break that to confirm. If we get above 2783 on a close, all bets are off. We're back to long again. My downside objective on bank that I called earlier this week, I think it was, or was it last week? Anyway, we're looking for that downside bank. And if we get a run into, if we get a pop below here, come back into this, this could be a nice big run back down into this range, and these banks could start to take some hits for whatever reason. Yeah, we're literally sitting on TD at 77.32. You don't want to see it getting any lower than that. Look, it's literally sitting in there. Yeah, you want to see that react off of there. If not, I just got this doomsday thought about banks taking a dive. Google's hit our objective. We're looking for it to come back into here. We thought it might have been just going to come back up and revisit this yesterday, but we want to see it get back into this consolidation, get a reaction off of that and start pushing higher. Re-access this level again. If it doesn't, like we mentioned before, if it gets through the 50% of that consolidation, then we're looking for a downside, and then we're looking for 152, no, 154 to 155, 156 area. Adobe. I was looking for Adobe to go down, and yep, it's heading down. And our gas, natural gas, did we get down to my level? I'm just wondering if they bought me in this morning. Pre-market was down here. Pre-market was 1256. So now it's 1270. Got down to 56. So now it's up to 74. So they've done their little run down here for all the other little people. The rest of us aren't going to get an opportunity to get in on that, I don't think. And that's going to start moving out of there. But I was looking for a run below these lows. There's 730, 930. Alrighty, so we got our low, and we're looking for it that to continue coming down on the downside, and it is doing just that. Come on. When you hear the fan has to kick in just to start making the computer move, it's time for me to get a new laptop, I think. So we've run these lows out now. And again, that's just studying price action the way we're looking at it in here. I'm waiting for it. It's not lucky guessing. That's just staying in price action. And worked quite lovely. So now we're through this candle. I like this here. We have all that significant low is now taken to the downside, and we have a reversal. We have this order block here. We got a body above here. Get through that baby again. That's good. Now watch this candle. If we can get through here and through here, I ignore this one and look for this one. Body's got to get above there though. If it doesn't get a body above that, then I'm still back to this one. And you're looking at the large range, so keep that in mind as well. 50%, 62%. See it closed below that, and now we're right into here. Snap, hit it. Now I want to see it start going higher. I'd like to see a portion of this stay open. I would not like to see it drift down into here again. This is, yeah. You want to see that portion stay open. This is just a quick liquidity run. The fact that we're eating through this candle here now on the downside. Not exciting. We have a full fill of that fair value gap again. We've ran up, come back down, immediate rebalance. Right to almost perfect entry right there. Now I want to see this continue to push higher. I'd like to have seen that stay open, but this immediate rebalance is now treated as a fair value gap anyway. So we'll see where this candle goes now. That candle comes back, taps, nice. That candle comes back, taps the high. Now I'd like to see that leave here. Immediate rebalance, come back up, creates a fair value gap. Treat it like it's a fair value gap. Wait for the next candle to do the thing that we wanted this one to do. Just to tap that. Immediate rebalance, came back. Now it taps it, and off you go. Nice. That makes total sense to me. This quick, I'm thinking, oh, I didn't want to see that close. That's an immediate rebalance. Back into this order block. I do not want to see it get below here now. That's 50% of that wick as well. Get out of Dodge. No, not interested. Not interested. We're below that already again. Look at that, hey. Wick's just not just a lot more chop. Still looking up, still looking for here. But yeah, I wouldn't have been interested in that just from all that wicking going around there. So now what you want to see is you want to see it break this candle's high for another market structure break to go higher. Or at least these two candles. If we get bought, yeah, we got a body above here now. So where are we aiming for upside? Upside range. You're looking at 124, 125, 126, somewhere around there. Watch how we find support off of these levels. That's the high of that one. There's the body. Inside that fair value gap again. London low not taken. NQ to take London high and then reversal. We'll hunt for previous day's high. This is fun. It's bouncing around. Right back into premium discounts again. Came back up into that range. That's probably 79% of that range right there. Option trade entry reversal. Come back down to not even hit 126. 125. You get through here. We're already drilling through this candle. We're down to mean threshold of this candle here. So we're already drilling into this last sensitive down close candle. We sent a probe through that already, trying to pierce that. And now we'll see if we can run through this cluster here. If you want it to go higher, it's got to get, you start using these as support, not drill through them. It totally loses its strength when you see these little clusters get taken to the downside. You want to see them just come back, find support. And because again, it's Friday, you get a lot more whipsawing around. These ones that you would typically find support at, as soon as it runs above them, comes back in and hits it, you'd want to see that the open at best, or the high, sorry, the close of these candles, or open of this one, find support and then snap away real quick. That's typically what you want to see. And that's what you get in this candle here before it ran up into that range. So you'd be pulling your fib tool from, and you can see how everything's just much more jumpy. So you're buying it at a discount right down in here. And then at 50% break even, 62, you chase that up, just drag your stop loss right up behind it. That runs to 70, 75. If it hits 79, then you pull that up to 75. It comes back, snaps in, takes you out, provided it hasn't done that when it was bouncing around inside that candle. And you move to the sidelines and wait for a different setup because you're inside that range again. If you do a rinse and repeat, you're off of this one here. Stop loss is down here. Hit 50%. Move to break even. It does not come down to get you. Now it's up to 62. You move to 50. So you see but that's super choppy. Wouldn't even participate in that. So watch this candle's mean threshold. We're drilling into that candle now. We want to get through that, and you want to get through this. So those are the two candles with a big fair value gap in the middle, because that's an immediate rebalance. So treat that like a gap, like a fair value gap. We're drilling through here, through. Now you're looking for that 125, 124 that we're talking about earlier. That's in oil. You're talking about that in Hunts. Let's have a look here. You're looking for it to go higher, Hans? Oh, the buy side's not taking this. I see what you're saying. First presentation, through, found support, continue going higher. First presentation, came through, came back into the range, into that level you're looking for here. Through it, hit it, took out the highs, reverse. It's got to get through here. It's got to break that structure to keep coming back into the range. Otherwise, fair value gap, continue going higher. You have this little gap down in here too. It's a little common gap, so you want to see that. If that holds, run higher, take out these highs, and then you're looking for 71.28, 27.29, and then see if you get worked through that. You look for some support at 71.29. This computer's driving me crazy. It's really choppy. It's slow, it's sluggish, especially in oil. It's just not responding. Come on. Yes, we will. And that's the chair you can hear moving in there. It's not me farting. So we're taking out this low here. Get this little reversal. Trade back up inside. You want to see this get taken to the downside. It does. Find support in here. You're coming back in that range now. Google. We talked about Google. Banks. Gas. Did I just delete that? Damn it. Oh my God, this thing's so slow. Yeah, everybody marks the 7 day. Everybody marks the first fair value gap. You should anyway. Should be a natural part of your assessment. Not anyone, everyone should. Why is there not giving me an opportunity to... Okay, screw that noise. Here's your first presentation right here. Your indicator should automatically give you that. So reversal, trade up, trade back into it right here. We finally cleared out the high. First presentation on the 1 minute begins at 9:39. Highs are taken. Come back, find support here. 146 all the way down to the first presentation again. Ideally, you'd like to see 138, 139, somewhere around there, 138.5. Let's see if that holds. What's our where's our little cluster of that's S&P. Where do we have all three of them? There we go. We talked about running up to here, and that's where it's hit. Now I want to see if this holds price here, or do we dig deeper into this up close candle here? We're filling that little gap, or rebalancing this yesterday's candle, and then do we get a reaction off that and start coming down lower in Dow Jones? This is performing in the last 3 days exactly as we wanted it to, and now I want to see the hammer down. So yesterday we were talking about making sure that it actually closed below that level. It did. Then we wanted to see it reverse back into here on Friday. Then next week we could see a pump up here during the election, then run down. It's going to be crazy fun to watch where this price goes. All right, so there's the high. And come all the way back down into here. We got this whole cluster here, right down to the first presentation, and see if they get a reaction off that. There's your 7th day. There's your first presentation. Mm-hmm. We've got a swing here. We've traded below it, back inside it, back inside this range. If we pop above it on a close above 151, look for the range to extend, and then look for this to be the projection. We could look at that as a swing projection. If we can get above here, we get a body above that, then if not, pull your fib tool from here to here, 50%. That should put you somewhere inside this box, or pull your fib tool in here and see where that gets you. If we get a body above this, look for your fib extension. Oh my God, this is lagging so much. Come on. Come on. It's driving me crazy. There we go. Got a body above. I want to see this provide support here, and we're looking for this to go higher. Yeah, I'd like to see where this, we have a slight close above that fair value gap there. If we can get above that candle's high, this next swing projection at 2.5. So that'll be a full one here. So you're looking up at 3.5-ish for upside. 3.5. 4 is going to put us right in here. 4.5 will actually put us right at 300 again. So we'll see if we get more upside here. And how many people are just chomping at the bit to get in here? I want to buy. I don't care if it's Friday. I don't care if it's election. I just want to make money. I just need money. All those other things that's going through your head right now. It's almost like you need one of those days where you can say, I called everything on that day exactly where I wanted to see it go. It performed exactly as I wanted. Why didn't I? Well, why didn't you? Because A, it was not the day to do it. B, there's an election. And C, sometimes you need a day to just test yourself on your discipline to say, I'm going to stay out of this. And I'm not going to react to my emotions. I'm not going to let my emotions drive my trading. So far, we're still looking for upside. We're calling upside. And we've zeroed in on the point at which price changes direction for us. And so far, that high has been taken. We called it right there, right there. Came back down. That's allowed. Bodies are respecting the gap. Now, we took the high. Now I'm looking for further run higher. We can get a body above here. That's even better still. Find some support at that high and keep pushing higher. So even though we called it, I just gonna be disciplined enough to just sit on the sidelines and enjoy my calls on a crazy Friday with a whole bunch of people, with 39 people watching, having a good time, picking out price. Meanwhile, on the 15-second chart, Hadi caused the awesome reversal. No huge structure break, but I do see it on the 15-second chart here. If you're looking for this little run up, you take that on the upside, you trade back into that candle or that cluster right there. Bodies trade into it. See how the bodies, the wicks don't start whipping through it like you'd expect them to do. You want to see that whole price all the way through. Takes out the highs, done, dusted. If you're just aiming for that. Reverse. We've taken out that high, 15 seconds. We have a reversal. We've come back. We did not get an opportunity to get in on that. That's the range. You already passed the 50% and you're back to that original fair value gap that we were looking at earlier. So if we start eating through that again, welcome to Frick Me Up Friday. So now you want to see it blast through, all through here and here. Get some legs. That's just a run back up inside that range to a premium. It's got to get through that premium to go higher. There you go. Good. We've closed above it. Now you want to see that march up higher. And come back inside here to that wick. You don't want to lose half of that, more than half of that wick. Just coming back into the first 25% of it would be nice. I'd love to see that stay open right there and not fill. What are you going to give me? Institutional order flow? Just let her rock? Come on, just take off out of there now. That would be nice. Leave that little piece open on a 15-second chart. Yeah. They're not going to give us the full. What kind are we on now? Just came into the top of it. Nice. March away. We have an imbalance. Highs are taken. There's your imbalance. Right to the edge of it. Do we want to see the imbalance stay open? We're just coming back into this little box we're looking at right here. We're looking for support inside this box. %. I don't want to see more than 25%. The wick would be nice. Didn't quite get the 25% of that box, but I must have been a hair short of what I wanted. Take out the high, find support off this order block here now. Start climbing up. Got a body above here. That looks good. You can go straight up now. Where's my carrot? It needs a little motivation, I think. We'll put the carrot up here at 2. It'll have to go over here because it's going to take a while to get there, I bet. Dang, right through it. Take the structure all the way back into here. Wait for the body. If we get a body below here, look at this one. There we go. Got a body. This now becomes the reactor. Imbalance, mean threshold. This is where you get real smashed around, try and stay on the horse. It's spinning around trying to throw us off here now. So now we're eating through it, the body through that again. Bodies are still respecting the inside of that fair value gap. Wicks do a little bit of mohawk below. And look at this. Michael teaches this in his 2024 mentorship. You want to look for, oops. Come on, give me my carrot. We must be getting some news. 10 o'clock or some crazy crap happening here. Equilibrium. See that wick right there? Right off the equilibrium. And now we got crazy whipsaw. So we're through here now. This horse is spinning. She's a bucking, trying to throw you off. Look for support here, inside here. If we run through this again, on the upside, mean threshold. Inside this range, there's nothing else left in here except for, oh, we're right off that one there. We're drilling into that. This candle here is holding price. For me, it's holding this, and you got that wick, half that wick. If we can get through half that wick, then we're looking for further carrot run. We've traded below here, and I want to see this here give way to the downside. There's a little tiny imbalance down here too. Keep that thing in mind right here. This is hard to stay on the horse on this one. See, the bodies are back to being above, so now you go more bullish. If it gets below it, then you're more bearish, and you're inside that range again. You're looking at that wick, remember 50% of the wick, you're under it. So you want to see 50% give way to the upside. News is coming. I think this is news release already, isn't it? 10 o'clock. Great place to just drive right through all of these guys here. All the trend liners are putting trend lines up here. They're putting troughs in here. See, trade below, going lower. Break structure, break structure. This becomes important here. If we get a body that closes below this, and it does, nope, literally closes on it. So this one here becomes important. A fill of that fair value gap, old lows. That little imbalance right there. See that little imbalance? It's low and it's high. Its high is this candle retracing right back into the high of it. See that? Bing, hits it. Go lower. So we'll see if we can get, so now we're through this body. These two candles here become important to me. I'd like to see that stay open and just a portion of that get hit. It does. It gets hit right here. Body trades below it, comes back inside it. Now you're looking for lower prices. And I don't want to see this get back into here. So I'd like to see us get down into maybe 132-ish. See if we can tap 132. Hey bro, have a good weekend. No, you had to go. You have to go here soon. I'm heading to breakfast to see you Monday, Lord willing. Yes, I will see you on Monday, my friend. Have a great weekend. All the best. I'm going to go have breakfast with my parents. I'm excited. Driving out to there to see them today. So I will see you on Monday, my friend. Have a great week. There's the 32. See what kind of reaction we get off of 32 here now. See how that 32 level? I called the 32 level right in front of you, right before it happened. That's a discount array, man. Once you identify these discount arrays, you can see if they provide a level of sensitivity. Even in this crazy price action right now, that's still a sensitive level. So now we're back inside this range here. I really got nothing for you here other than pull your fib tool from low to high, 50%. If we get a reaction off of these old lows, what you do here. Yeah, I want to see if this is really going to start booking her down now. I want to see it get below that low and below the 32 on a close, the 132. The 132 you're calling it. I want to see it get below that. If not, we're pulling back up into this range and you want to see structure break now. You're in the middle of the range. Sit on your hands. If you're not, if you're, sorry, if you're long off of this reverse here and that order block, the body trades above it, comes back inside it for a long inside that range, then your fib tool is chasing up behind this thing here. I like that. If we can get through that one again, see that right there? You find the level of support at that. Good. Now let's see if we keep marching higher. Now we go for the wax or the little wax carrot here at 203. This is good. I like that. Good. Oh, come for the carrot. I'll be there in a sec. I just want to see it hit this carrot, and then I'm done for the day. Make my point. And come down into here. Re-access this candle. It'd be nice to see that stay open. But if we hit this high or the open of that candle right there, and start running higher. If we take out that candle, now that we've taken this high here, you look for these little tiny imbalances and reversals. If you lose that on the downside, look for that for support and you're back inside this range again. See, we're eating through the mean threshold of it. Drilling, drilling, drilling. We get on the other side of that. You have an imbalance above you on both sides. Back into that initial fair value, yeah. Inversion. No body below here yet. Watch your carrot. This could be a nice little run up now. That carrot's going to be blown right through. That's probably going to be it for me, you guys. Watch for the carrot, and then watch for that level above us right there to 228. And if you get through 228, then I'm not here, so you'll have to keep an eye on your levels. So first one is 202. Next level's up. If we break, again, look for this one here. If you lose this candle on the downside, look for a run back into this range. And then if you really want to start taking out these lows, you also have to break structure and look for this candle to provide some support. I just want to see it hit the carrot there before I go. Zach, anything I show you on this time frame, it works on every time frame. Otherwise, it's bullshit. If you have one little technique that works on a 15-second chart and does not work on every other chart, I call bullshit. It is not algorithmic. Everything I'm showing you here has to work on every time frame to a monthly chart. There's the carrot. Done. So if it doesn't work, it has to work on every time frame to be algorithmic. That's what I believe anyway. You cannot have something just form fit to a specific time frame. If it does, it is just coincidence. It is not accurate, and it doesn't prove the test of time. Anyway, these are my upside numbers. I'll give you my upside numbers. So we had 195. That's done. The next one is 228 above you, 274, 432, 482, 518, and 624 for upside. So there's the next price leg finishing off. Anyway, I can sit here all day playing this stuff with you guys. You get the idea. We've called this pretty accurately this morning. Looking great. Again, it's Friday. Don't mess with it. Don't go into the week, even though you were calling it, even though it looks great at times. Um, just keep your powder dry, you guys. Monday, Tuesday, Wednesday, after the election, the whole of next week may be just a cluster. So give yourself a break, give yourself some time. There's plenty more days to trade in. Trying to catch these big, crazy liquidity runs, you're just gambling. That's a gambler's mentality. So, anyway, keep your powder dry. Love you guys. Take care. Thank you very much for spending your time with me this morning. I appreciate it, and I will see you guys on Monday. I will, if I am in here on the weekend, I will, as usual, post on Telegram for you, and it will be in Bitcoin. I'll be playing in Bitcoin just for practice. I like to practice on the weekends as well. So, anyway, I wish you guys all the best. Have a safe weekend, and see you guys later.